Welcome to Market Momentum.
All right, let's dive right in and see where the smart money is moving. Today, we're going to track some pretty big shifts across the markets. We'll kick things off with crypto, then jump over to precious metals, see what's happening with U.S. stocks, and then tie it all together with the really important clue from the bond market.
So first up, let's talk about the wild world of crypto. There was a little bounce recently that got a lot of people excited, sparked a bit of optimism, but you have to ask yourself, was it just a false dawn?
Because that optimism pretty much hit a brick wall. When you look across the board, Bitcoin, Ethereum, XRP, they all rallied right up to key resistance levels and just stopped. They couldn't break through. And what's really crucial here is that the move wasn't confirmed. There just wasn't enough buying power to keep it going. So the overall signal here is be cautious. That buy signal just hasn't shown up yet.
Okay, so from crypto's caution, let's pivot to where the most dramatic action is happening right now, precious metals. They've had a monster run-up, but the big question is, have they finally hit their peak?
The analysis on this is getting pretty direct. The view has officially flipped to sell. The thinking here is that gold has hit a really significant peak, at least for the medium term.
So why the sudden change of heart? Well, it's not just one thing. It's actually a combination of three classic technical warnings, all flashing red at once. First, you have a double top, which is a textbook bearish reversal pattern. Then, gold actually broke below its upward trend channel, a huge sign that momentum is fading. And to top it all off, the Relative Strength Index, the RSI, hit an extremely overbought level, basically screaming that the rally was just out of gas.
And what's really interesting is, this isn't just about gold. Silver is telling the exact same story. It's showing the same patterns of weakness, breaking its channel, crazy overbought conditions. The call here is a full sell on silver too. It's a parallel story of exhaustion.
So, with warning signs all over crypto and precious metals, you might be wondering, where is the opportunity? Well, the analysis pivots right over to U.S. stocks.
You look at the major U.S. indices, the Dow, the S&P 500, the Nasdaq, and the message is pretty consistent. Yeah, there's been some sideways chop, maybe a slight dip from the peaks, but the underlying trend is still considered strong. The recommendation is pretty clear: continue buying.
And this isn't just a lukewarm take. The conviction is really strong. A recent Citi report frames any of these market fears not as a major risk, but as a chance to get in. The analysis says recent dips are buying opportunities and, get this, that there are zero parallels to 2008. That's a huge statement.
All right, finally, let's look at the one piece of the puzzle that kind of ties this whole thing together, and that's U.S. bond yields, specifically the 10-year Treasury.
The key number to watch here is 4%, and yields on the 10-year have now fallen below that critical level. Now this is where the story gets really, really interesting, especially when we think back to what we just talked about with gold.
Because think about it. Normally, falling bond yields are like rocket fuel for gold. Lower yields make assets that don't pay anything like gold way more attractive. So in theory, gold should be flying right now. But it's not. So the big question is, why?
The fact that gold can't manage to rally even with this major tailwind from the bond market, well, that tells you everything you need to know. It just highlights the incredible underlying weakness and really confirms that sell thesis we saw earlier.
So, when you put it all together, you have metals that are faltering, stocks that are holding firm. It really feels like the market momentum is shifting in a very clear direction. Thanks for joining us. Your subscription and likes are always appreciated.